Hello students, in our previous lecture we are studied a deductions under chapter 6a applicable for individuals. Under this unit we are studied the deductions allowable for individuals from gross total income and the allowable deduction under section 80C to 80U. In our today's lecture, we are going to start our unit number 3rd in paper first, that is taxation of partnership firm. Here introduction. Indian Partnership Act 1932 section 4 defines partnership as relationship between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. Persons who have entered into partnership with one another are individually called partners and collectively called a firm under Section 2, subsection 23 of Indian Income Tax Act 1961. Firm, partner and partnership have the meaning respectively assigned to them in the Indian Partnership Act 1932, but the expression of partner shall also include any minor person who has been admitted to the benefit of partnership. In case a minor is to be admitted to the benefit of the partnership, in case of minor is to be admitted to the benefits of the partnership, there must be at least two adults to form a legal partnership. An individual or a company or a trust can become a partner by HUF, or firm cannot becomes a partner in firm. Okay, so partnership firm or partnership means, according to the Indian Partnership Act 1931 section 4 defines partnership means a relationship between persons who agree to share their profits of the business carried by one for all or acting for all. Okay, one acting for all is called partnership firm. Persons who have entered into partnership with one another are individually called partners. It means in a partnership firm, the partners is more than one, and it is called partners and collectively called partnership firm. Under section 2 subsection 23 of the Indian Income Tax Act 1961. The firm, partner and partnership have the meaning respectively assigned to them in the Indian Partnership Act 1932. Okay, and in partnership firm, the minor partner is also admitted for the benefit of the partnership firm, but at least two partners have adult in forming the legal partnership firm. Okay, legally forming the partnership firm, at least two partners have been adult for forming a partnership firm. Okay, and HUF or trust or company cannot become a partnership firm. Okay, so partnership firm is partnership firm means it is a relationship between two or more persons to agree to share the profits of the business organization. Okay, according to the Indian Partnership Act 1932. Here assessment of firm. Assessment of firm under section 184. The silent feature of taxation of partnership firm are as under. The firm will be taxed as a separate entity. There will be no distinction between registered and unregistered firms. So the firm will be taxed as separate entity because the firm and the ownership is the separate from business. Okay, so the firm will be taxed as a separate entity. There is no any difference between registered and unregistered firms. Okay. Second feature is the share of the partner in the income of the firm will be exempted under section 10 subsection 2A in computing the individual income of a partners. It means the share of the partners in the profit of the firm can be exempted under section 10 subsection 2A in computing the total or individual income of partners, because the firm will pay a tax on its profit, so that the partner cannot pay again or double tax, so that the partner's income will be exempted under section 10 subsection 2A. Here third feature, that is remuneration to partners in the form of salary, bonus and commission, or by whatever name called, will be allowed as a deduction in computing the income of firm, subject to certain restrictions. So here the firm has allowed to deduct remuneration of the partners, or salary paid to partners, bonus given to partners, commission given to partners. Okay, so all these expenses are allowed to the firm for deduction in computing the firm's total or taxable income. Okay, but here some restrictions is given, and that restriction is the partner is a working partner. Okay, he is working in the firm, then his salary will be allowed for deduction. Okay, those partner who are not working in the firm are not allowed to deduct the salary from total or from expenses or as expenses of the firm. Okay, only working partner has allowed to deduct the salary as expenses of the firm. Okay, then next, the firm paying interest on funds employed by partners can claim deduction in respect of such interest paid up to maximum 12% per annum. It means interest on fund employed by partners can be claimed deduction in respect of interest paid up to maximum 12%. It means uh, not more than 12% allowable deduction for interest. Okay, so within 12% the deduction can be allowed for the firm or partner who employed their fund in the partnership firm. Next, the income of the firm will be taxed at a flat rate of 30%. So the total income or total taxable income of the firm is of flat rate of 30%. So 30% is taxable income of the firm. Okay, so 30% profit or profit, whatever the profit of the firm, the 30% tax will be paid by the firm. Okay, it is a flat rate of taxed. Yep, the partnership firm will be assessed in two ways, that is partnership firm assessed as such PFAS, partnership firm assessment, and second one is partnership firm not complying with the provision of 184 or contravening these provisions. It means partnership firm will not comply with the provisions of section 184 or contravening these provisions. Okay, so there's two types to compute the taxable income of the partnership firm. So here partnership firm assessed as such PFAS. In order to avail the status of PFAS, a firm should satisfy the following 5 conditions. Okay, so here 5 condition is given to you. That is, first is a firm must be evidenced by an instrument such as partnership deed or other documents containing terms of partnership firm. Okay, then the firm will compute his taxable income under PFAS method. Second point, that is, individual share of partner should be specified in instrument. So the individual share of the partner should be specified in instrument or in agreement. Okay. Third point, a certified copy of instrument should be submitted along with the first return of income of firm. A certified copy of instrument or agreement should be submitted at the time of filing income tax return of the firm first time. Okay. Fourth, revised instrument must be furnished with returns whenever there are changes in constitution or profit sharing ratio. In changes of agreement or instrument, the firm will furnish this information while filing income tax return. Okay, whatever the changes will be made in instrument will be furnished during filing income tax return. For example, changes in constitution of firm or changes in profit sharing ratio of the partners. The firm can furnish all the instrument or all the agreements changed by the partners at the time of filing income tax return. Then fifth, there should not be any failure as mentioned in section 144, which are: first, a failure of firm to submit its return of income even after receiving notice. Failure to comply with all the terms of notice under section 142 subsection 1, requiring the firm to produce specified accounts, documents or information or to get the accounts audited. If the firm does not comply with the provision or with the notice under section 142 subsection 1, requiring to firm to produce specified accounts or documents or information, or to gets the accounts audited from auditor. Okay, so C point, failure to comply with all the terms of notice under section 143 subsection 2, requiring an attendance before assessing officer or the production of evidence in support of return filed. Once firm assessed as PFAS, once firm assessed as PFAS, by fulfilling the aforesaid conditions, it will be assessed as PFAS for every subsequent year. Okay, so the firm will satisfy all the conditions which is discussed in above, will compute his total income under PFAS for every subsequent or every assessment year. Okay. Then next method of computation of total income of firm is partnership firm not complying with the provisions of section 184 or contravening the provisions of this section. Okay, so here if the firm cannot comply with the provision of 184 section, then the firm will assess his or compute his tax by this method. So here computation of total income of firm. The total income of a firm shall be computed under the various heads of income in usual manner, keeping in view the residential status of firm. However, while computing the income from business or profession, the following points should be carefully considered. So here computation of total income, if the firm cannot comply with the provisions of 184, firm cannot satisfy the above discussed the conditions of PFAS, then the firm will compute his total income as computation of total taxable income of the business or partnership, business or profession. But some points should be taken into consideration while computing the total taxable income of the partners or partnership firm. Here first point is interest to partners or interest on capital of the partners. Okay, it is interest to partners, it means interest on capital of the partners. Interest paid to partners exceeding 12% per annum is disallowed. It means 12% or interest paid on capital of the partners is more than 12% per annum, then it is disallowed expenses of the partnership firm. Remember this, interest paid to the capital of the partner, not more than 12% interest is paid to the partners. It means exempted up to 12%. Interest on capital is exempted up to 12% per annum. Okay, if for example any firm can pay 15% interest on capital of the partner, then 12% interest on capital will be allowed for deduction. It means 3% interest will be disallowed for deduction, and that 3% interest will be taxable under partnership firm or under the income of partnership firm. Second point, remuneration to partners. Here, the remuneration paid to partners in the form of salary, bonus, commission, etc. is allowed as deduction if, so here the condition is given. So remuneration, or we discuss the salary of the partners. Here salary of the partners, here some certain restrictions is given. The remuneration to the partners in form of salary is allowable for deduction, and certain restrictions or certain condition is given to you, that is remuneration paid to partners in the form of salary, bonus, commission, etc. is allowed as deduction if it is paid only to the working partners. It means if the salary is paid to working partners, then this salary is allowed for the firm for deduction or allowed as a expenses of the firm if the partner is working in the firm. Second, it is authorized by the partnership deed. In your partnership deed, if you mention it, then it will be authorized in your partnership deed, then it will be allowed for deduction as a expenses or expenditure of the firm. Third, it does not pertain to period prior to the partnership deed. And fourth, it does not exceed permissible limits. So here permissible limits is given to you. The firm cannot deduct overall salary of the partners as expenses of the partnership firm. Here some permissible limits are given to you, that is in case of any firm. In case of any firm, the allowable deduction of salary of partners to that firm is given here. See the chart, you can understand easily. On the first, rupees 3 lakh of the book profit or in case of loss. It means if the 3 lakh of the book profit or loss, then allowable deductions to firm as salary deduction is, so remember this, if the first salary or first 3 lakh or salary paid more than 3 lakh. So up to 3 lakh allowable deduction for firm is up to 3 lakh. Okay, got it? Up to 3 lakh allowable deduction for firm is 1,50,000. Okay, 1,50,000 or 90% of book profit, or 90% of book profit, whichever is more, whichever is more, whichever is more. So remember this, up to 3 lakh salary, the allowable deduction for firm is rupees 1,50,000 or 90% of book profit, whichever is more. Okay, got it? And above 3 lakh, so up to 3 lakh 90% or 1,50,000, whichever is more. Above 3 lakh, the remaining balance, for example, if salary paid to partners is 4 lakh, then 4 lakh minus 3 lakh, 3 lakh, that is slab 1, 1,52,000 or 90, 1,50,000 or 90% of book profit. Above 3 lakh, it means remaining balance. On the remaining balance, that is 1 lakh, 1 lakh, that is allowable deduction for 1 lakh is 60% of book profit. Okay, 60% of book profit, remaining balance, on remaining balance. Got it? The allowable deductions. Okay, so here the allowable deductions is given to you, or permissible deductions for working partners remuneration. Okay, so this part of partnership firm is very important during computing the total taxable income of the firm. Other points are very easy. We compute a income or gain of business profession. Same format is here. Net profit as per profit and loss account. Then we add disallowable or inadmissible expenses. Okay, and then we deduct a allowable income of the firm. Okay, same as it is, we compute the income and gain from the business or profession. Same format will be applied for computation of taxation of or taxable income of partnership firm. But in computing the taxable income of partnership firm, the remuneration of partners is very important part while computing the income of the partnership firm. So remember this, your all solution is depend on the, or all total taxable income is depend on the remuneration of partners. Okay, so first of all we add the remuneration of partners in inadmissible expenses. Okay, then we get a deduction of that expenses in allowable expenses, and according to these permissible limits we can get a deductions of salary or remuneration of partners. Here, deduction from gross total income. So, in order to ascertain total taxable income of the firm, the following deductions can be claimed under Chapter 6A from the gross total income of the firm. So, the firm or the partnership firm will take a deduction under Chapter 6A, and these deductions or the sections is given to you, that is deductions or allowable deduction under section 80G, 80GGA, 80B, 80BA, 80C, 80D, 80I, 80IA, 80IB and 80JJA. However, the deduction in respect of long-term capital gain are not allowed from the aforesaid section. So the long-term capital gain cannot be allowable as deductions from gross total income under section 80G to 80JJA. Okay, so today we are discuss the meaning of partnership firm and how to compute the taxable income of the partnership firm. So while computing the partnership firm, we have to compute the total taxable income of the partnership firm by two methods, that is PFAS and the condition which we are discussed in our this lecture. Okay, so 5 condition is given to you, and if this 5 condition is not fulfilled by the firm, then the firm will compute the total taxable income of the firm by using the format or by using the method or by using the format of business or profession or computation of income or gain from business or profession. But some points should be taken into consideration while adopting the format of business or profession. So here some point is given, that is interest or interest to partners. It means interest on capital to the partners. So interest on capital of the partners is allowable deduction is up to 12%. Okay, it is inadmissible exceeding 12%. Okay, or disallowable above 12%. Okay, remuneration of partners should be taken into consideration when computing the total taxable income of the partnership firm. Okay, as well as we also remember this, the partner or remuneration of partner is allowable if the partner is working in the partnership firm, and allowed if it is authorized in the partnership deed, and the allowable or permissible limit is given to you. So, okay, so today's lecture we are study a partnership firm and computation of computation of total taxable income of partnership firm under two methods. Okay, we use a second method to compute a taxable income of the partnership firm. In our next lecture we are study a format to preparation or to computation of, okay, in our next lecture we are study a format to computation of total taxable income of the partnership firm and elements of partnership deed. First of all we study a elements of partnership deed, and then we go ahead to study a format of computation of total taxable income of the firm. Okay, so here we stop the lecture. Thank you very much.